All right. Good morning, everyone, and once again, welcome back to a new week, a beginning of the new week. 5th of February, we are moving into early trading hours, 2:30 a.m. Eastern now, and a warm welcome to all new members joining in to the YouTube family, as well as the free Telegram. Uh, do feel free to write to me at any moment regarding any videos that have been posted, any query you have, or disagree with something, and we will discuss it out. All right, there are about 15 educational videos being posted till now, and more will be done in the coming weeks. But if you have been watching at least these two sessions, which are absolutely free and they are going to remain free for life, there are a lot of case studies that we are doing in terms of wave counts, uh, at least 1 to 2 per session. Apart from the live trading channel, which is subscribed and invite only, even if you are following me here, then there is a lot of learning to be done among ourselves. So let's learn together again, and this time let's touch base with the Bitcoin. Let's begin with Bitcoin. Normally we begin the UK session with the Bitcoin analysis, wave analysis, and then if time permits, we'll come back to a euro or the dollar index. All right, so here's what Bitcoin has been doing. It's been calling shorts since 20,000 levels now. We've been doing that. Let's see where the wave counts are right now. Right. Maybe we'll touch upon different charts. Believe it or not, exactly how we work upon producing trade calls, that same method we are discussing as a case study. All right, so that itself is a self motivator or self inspiration to do your own analysis. All right, brothers and sisters, let's get started with the Bitcoin. Again, we will start plotting the waves from the 2017 rally, specifically July 2017. We are beginning from the daily chart. All right, we might end up on a 15 minutes chart or an hourly chart, depending upon uh, the clarification, the clarity that's being produced by that particular time frame. It's very clear. We've already done 5 now, so I'm not spending much time explaining the wave counts here. Let's quickly complete the 5 first. Please watch out for your Telegram channel, that is t.me/Japee. If you have not been subscribed to that channel, you might want to do so. It's going to remain free access for life. The only thing that we keep on communicating regular basis over there, if a new service has been launched or anything else, any other communication mode. So do consider joining there, and watch out for a new service that is being launched. I'm thinking about decided to launch about a write-up that I'll be sending on a daily and a weekly basis. I'll be announcing that very soon now, in just a few hours. Okay, so the first leg has been done at a very high degree. So I'm putting it into two brackets. Big question lies: have we done the correction? It could be A or 1. I'm not printing 1 here, but we all know that that's a different, alternate A, it could be A or first wave, and then B or the second wave. Would it be correct to plot C or 3 here? Mostly yes, or could go a bit lower. All right. So having gone short from, I remember precisely we went short around 16,000, 17,000. All right. We are almost off the desk at this point in time, but what we need to think and consider now is the probable next move in the counter. All right, we've got some tools which should be used around these times now. If there is a change to be expected in the current trend, then we'll have got to put all the possible tools on your screens, brothers. So that's the trend line. First of all, I don't claim that it is a very long-term support channel or something like that, but that's what I have since the 2000 levels, 2007 lows, 17 lows, sorry. Be watchful around these levels. That's what is the advice now. It's maybe it's not the best time to aggressively go short again, but be watchful, right? Why watchful? Because it is stalling, prices are stalling right across the Fibonacci 61.8% support number one. Also, if you have gone through the educational videos earlier, the four basic pillars, don't underestimate that those four pillars. But all the time at a subconscious level we have been using them. Past resistance becoming future support. All right. So you've got a Fibonacci, you've got a past resistance becoming future support. You very close to the trend line support as well. Now the only thing which could be a matter of concern why I'm keeping using the word be watchful is that if it drops down towards the 127 or the 161% extension, I'm talking about the counter trend here. Just a moment, let me set it up for us. One good thing or one positive thing that you might be noting here is that it has hit the 38.2% extension level. All right, that's the first one, and also it's quite near to. I don't claim that it's a convergence, but it's quite near to the 61.8%, and it's bounced exactly from those levels. Now that is not a criteria to decide or to take a trading decision. Maybe not now, but that's why always be watchful here. It's going to be either from the current level or from the 5500 sort of levels where we can expect a turnaround. Maybe it's very difficult to call a trend reversal at this point in time, but at least a breather for all the bearish action since late December 2017 levels. All right. Another tool which you would want to put to use around these times, specifically when you're expecting a turnaround or could be a turnaround, is the oscillators. There is no necessity or there's no particular requirement of these oscillators to be plotted. But if you have them handy, it's 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 very useful sometimes. Watch out for bullish. There's no sign of a bullish divergence right now, but watch out for a bullish divergence. Maybe the histograms are showing a bullish divergence right now, but not to be seen on the RSI at this point in time. Watch out for these oscillators as well. Let me close them down so that we have a full chart view. The only thing that I don't have here is a better view of the charts in terms of the time. It's only from July 2017, so let's live with that for now. Okay, how about the 4-hour chart? Let's work upon this as well. First things first, it's a dropping market from 17,000 odd level, so let's do a resistance trend line. First things first, so it's quite clear we are in the sell zone right now. Where is your first price resistance coming? Meaningful price resistance comes at 11,500 levels. Alright, above that goes to 15,000 and then 17,000. Did you notice that sideways consolidation movement where we had discussed this point earlier on, sometimes last week, and also touched base with if this line breaks down, the drop would accelerate, and that's what exactly has happened. Okay, in terms of the analysis now, we've got an engulfing bullish, a good engulfing bullish pattern on Friday, I suppose, 2nd of February, after printing lows around the 7,500 mark. Right, could be possible. We are not here to discuss the trade points of or something like that. It's just a pure educational channel now. So it could be retracing, or could be printing or moving towards a new low. We'll have to wait and watch. Okay, so a tiny resistance is at 10,300 levels, and the buy side or the buy zone of that resistance trend line is also should be cutting above 9,700 level. At least wait for let's wait for something to happen on the north side of this trend line for a conservative kind of a trade signal to be applied onto. That will also do one more thing. It will give us a bullish pattern on the daily chart if you see a rally, okay, coming through from these levels. If we now go on an hourly chart, so the wave count, we should at least wait for a break above the resistance trend line, which is now sloping around the 9,700 mark, and a break of at least 10,300 levels to give us a decent confirmation about what could be on store. If it happens, then we are good to be on the north side. After that, we should be looking to buy on dips after that. Okay, that's the hourly chart now. We don't have a specific boundary in place. We are still waiting for at least one intermediary resistance to be taken out, which on the hourly chart it shows at 9,300, but I think 10,300, 10,200 is a meaningful resistance, at least at an interim level, which could be taken out first to give us a workable boundary in place. Okay, so that is what is Bitcoin. Be watchful for now. It may not be the time to go aggressively short right now, but at least uh, you may be watchful, remain on sidelines right now, and wait for some reaction around this price level. All right. Okay, brothers. Let's move on to a Euro USD chart now. Maybe I'll extend this session for about 5 minutes or so. As far as the wave counts are concerned, I'll touch base on this chart and the New York live session as well. But since we've opened this, at least let's uh, have a 4-hour chart view. In terms of the wave count, we are expecting, or we expect that wave 3 got terminated there. We are anticipating that the third wave has terminated around the 2537 mark. The second wave being terminated around the 1717 mark, and now we are now expecting wave 4 to turn out somewhere maybe somewhere here. And the previous support level is also at 2150, so that this is the entire range or trading range where the fourth wave could go and hit the mark. This is where we are expecting. That's the entire trading region where the fourth wave can actually go and terminate. Okay. Now the trend line. We also got a support line coming in or closing in around those levels very soon. Please be watchful for that as well. And the Fibonacci ratios I'm going to spread across the third wave now. There you are. So in terms of the analysis part or the wave counts, the past resistance becoming future support area is also seen around the 2270, 2250 region. So this entire zone between 2150 and 2250 could be a potential termination point for the fourth wave, which is unfolded nicely as a flat now. If you have been there with me, we have been doing that analogical discussion, which is I really find it very interesting, because we are learning together, and then we are also at the same time we are looking at the practical aspect of that particular pattern. If you have not yet been last week, because many must have joined over the weekend, this is what we were talking earlier: A, B and C. That is the standard flat which we are expecting to be unfolded on the EURUSD, at least for now, right? Please go through the educational stuff. I mean, you'll find out these patterns and everything. Most of the things that we've discussed or we are doing as a case study has already been discussed through the education stuff. 335. So we've got ABC 3, that is capital A, and then ABC 3, that is capital B, which got terminated on Friday, 2nd of February, I suppose, around the 25:20 mark, and now it could be unfolding into 5 waves, and a drop below 2400 would certainly accelerate matters for bears. All right, brothers and sisters, let's bring this session to a pause now, and I'll be coming back after a few hours to touch base during the New York live to do at least a couple of case studies. All right, and as I said, watch out for your Telegram channels. The new service that is being planned to be launched, that will be a write-up on a daily and a weekly basis, and the entire service package will also be described over there and on the web page, which you would want to visit on a timely manner to to see what is happening or what new is happening with us. All right, so let's bring this session to a pause, and once again I thank you for joining in live or watching this video on an offline mode, and as always, a humble thank you for liking, spreading and subscribing to this channel. Please take care and God bless. Until the next time, goodbye.